Look at this chart. Gold is going straight up.
And not in a healthy, normal, markets doing market things kind of way.
But in a someone chugged a Four Loko and listened to a David Goggins podcast at 3 a.m. kind of way. Because here's the thing. Over the last 40 years, gold has averaged about a 6.5% annual return.
Cute, respectable, a slow and steady asset class.
Or B, I am dramatically underestimating the emotional connection humans have with shiny rocks. But don't worry, it gets even weirder. And that's because nobody can actually agree on why this is happening. Not a trader, not an economist, not an analyst. And not even that one guy on Reddit who spends 8 hours a day ranting. Because it seems like everyone has a theory, but nobody has an answer. But before I keep going, this video is sponsored by Notion. And I don't mean that in a they paid me to awkwardly interrupt kind of way. I mean, this video was actually built inside Notion. Because normally when I'm doing research for my videos, I have macro reports, spreadsheets.
That's where Notion Agent comes in. Instead of doing the heavy lifting myself, I have the Notion Agent to help me.
Here you can see I've asked the Notion agent to provide a 2026 outlook on the gold industry. And a table showing the total gold held by various central banks. And the best part? If I want to add more data, the Notion agent allows you to dynamically update as you go. So instead of juggling research together from 5 different places, everything is a mess. Everything now is able to live in one clean, easy-to-use Notion workspace. This has helped me streamline my workflow. Tasks that used to take all day can now be completed with a couple clicks. And now, back to the shiny rock. Because there is one thing that's clear. Something big is happening underneath the surface. And today, we're gonna figure out what that something actually is. So let's start with debunking the explanation everyone thinks is the obvious. Inflation. And okay, sure, inflation sucks. Because rent went up, groceries went up, even fast food prices went up so much, and you'd think Ronald McDonald was hired by a private equity firm.
But here's the thing. Gold isn't rising because of inflation, at least not in the way most people think.
Because if it was just strictly reacting to inflation pressures, gold would have exploded back in 2021 when the CPI was doing its best impression of a meme coin.
So yes, inflation is a part of the story, but it alone isn't the answer to what's happening.
Which means something else is happening, and that something is a lot scarier. It's that foreign countries are quietly losing faith in the US dollar.
And when I say quietly, I mean the same way someone quietly deletes all their couple photos on Instagram
before announcing a breakup. Because the signs were always there, people just pretended not to see them. Because for 80 years, the US dollar has been the global reserve currency, which means it's the currency central banks hold. What the central banks are actually doing is far sneakier. They're calling it diversifying away from the dollar, not dumping. Diversifying.
Slowly and strategically, like they're trying to tiptoe out of a room without waking the sleeping dragon.
Because 20 years ago, central banks held over 70%, but today, well, the share is down to 58%. That's a 12-point drop.
It's basically central banks saying, we still like you, but we're also exploring our other options.
And those other options aren't the euro, they aren't the yen, and they aren't the pound.
It's gold. Gold is the side piece, the monetary prenup, the just-in-case-things-go-south safety plan.
And central banks are piling into it at a record-setting pace.
Because for the third year in a row, central banks have bought over 1,000 tons of gold per year,
which is more than double their previous decade average of 400 to 500 tons annually. In fact, 2024 actually marks the highest gold buying year in history. And this buying power isn't showing signs of slowing, because over 40% of central banks have said they plan to buy even more gold. It's safe to say this isn't a fad. This is institutional anxiety. It's central banks across the world starting to get nervous about US debt levels, long-term inflation risks.
And gold? Well, it's the asset they can move into when their trust is fading. But they don't want to start a fight.
But don't get me wrong, the US dollar isn't going anywhere overnight. It's still deep-rooted into the global financial system. The whole dollar is collapsing narrative you see on social media is usually just written by some guy holding 73 ounces of silver living in his mom's basement. Because the dollar is still the dominant currency globally. However, we are seeing central banks shift from blind faith in the dollar to conditional trust. And that raises alarm bells. Because gold doesn't rise when people are optimistic.
In fact, when trust is high, gold is boring. When markets feel stable, gold goes nowhere.
And when institutions feel safe, gold gets ignored. It's only when stability starts to slip that gold wakes up.
And that's why this move matters. Because what we're seeing right now isn't panic buying.
It's preemptive positioning. And central banks aren't reacting to a crisis that's already unfolded.
They're hedging a future they don't fully trust. But here's the part that makes it confusing. The stock market is near all-time highs. Risk-on assets are partying like it's 2 a.m. in Miami. And AI stocks are being valued like they've already replaced half the workforce. But at the same time, gold is also at all-time highs.
And this isn't normal. Historically, markets pick a lane. Either risk-on assets, like stocks and real estate, are soaring.
Or risk-off assets are rallying because fear is rising, not both happening at the same time. We're seeing a world where stocks are priced for optimistic growth, gold is priced for a troubling future.
And bonds are priced for confusion. This dissonance creates an environment where two people can look at the exact same data and come to completely different conclusions.
We're seeing more mixed signals than that girl who says, "I'm not looking for anything serious," and then asks what your love language is.
And that's something worth keeping an eye on.